All right, the Securities and Exchange Commission has concluded its international conference on the Nigeria commodities markets with the theme Commodities Trading Ecosystem, Key to Diversifying the Nigerian Economy. Let's talk to one of the participants and key stakeholder in the commodities trading ecosystem, the CEO of the Lagos Commodities and Futures Exchange, Mr. Akeredolu-Ale. He joins us from our Abuja studio. Thank you for joining us, Mr. Akeredolu-Ale.
You're welcomed.
So how timely was the Commodities Market Conference for regulators and you stakeholders?
Well, the timing is perfect and was long overdue. And if you go back, you'll see that there was a capital market master plan, 10-year master plan. And out of that master plan, one of the outcomes was that a vibrant commodities ecosystem should be built for Nigeria. And out of that also, an implementation committee was set up, headed by Ms. Daisy Ekine. And from that committee, it was decided also that we should have an international conference. And the timing is very good. One of the participants that was there, Professor Doyin Salami, heading the economic advisory team, spoke extensively about the commodities ecosystem and the diversification of income in Nigeria. And he also mentioned that when you look at the commodities ecosystem, you don't focus only on just agriculture. You look at the solid mineral space, you look at the oil and gas space, the energy space, and the other spaces. And then for Nigeria now, it's high time that we start diversifying our mono-income economy. He also spoke about agriculture. Agriculture is doing almost about 28% of our GDP now. Oil is doing 9%. Effectively, it means that part of the low-hanging fruit should be our focus on agriculture, which is one of our mainstay in Nigeria, and employ about 60% of the employable people population, which is good. So it's a timely thing that we are coming up with this diversification arrangement. And the stakeholders that were in were plenty. We have infrastructures that had already been deployed by federal government. And the nexus of creating a link between the private sector and all the government efforts was discussed. The warehousing issues were discussed, collateral managers were discussed, the outgrower schemes were discussed, and also how can we create fungibility and create instruments that are tradable to be able to raise capital to finance agriculture in Nigeria and to finance other commodities also in Nigeria. Some other participants also spoke about the oil and gas space and cargo and all that. And at the end of the day, when you look at the commodity space, apart from capital raising and funds generation and wealth creation, it also gives a lot of space for us to be able to create hedging instruments so that we're not totally at the whims and caprices of the volatility of the crude oil prices globally. So it's a welcome development that we're trying to diversify, and we're trying to create a focus among commodities, trade and commodities, particularly agriculture, which is a whole low-hanging fruit for the Federal Republic of Nigeria.
About SEC constituting a market-wide technical committee, of course, that developed a roadmap for reviving the commodities trading ecosystem. That committee submitted its report, which was over 40 recommendations to be implemented in 4 phases between 2018 and 2025. Now, where are we in the implementation of these recommendations? Is it just this conference? Is it just the start?
Well, first of all, I want to really commend the Securities and Exchange Commission, because currently now we have about 3 commodities exchanges, and each one of them are building up in their own skill set and their spaces to be able to grow that space. And there has been a heavy focus on the outgrower scheme, the farmers, to complement whatever federal government is doing. There is also space for how do we create liquidity in that commodities ecosystem. And like was mentioned yesterday, Nigerian farmers are still very poor, and they should be able to be part of the people making a lot of money in Nigeria. So the issue of capital raising and for them to be able to access finance, to be able to have a continuous cycle of to be able to produce agricultural products and to be able to sell. Also, one of the things that came up also from that space, because what SEC did was, in an ecosystem, there's so many players in the ecosystem apart from farmers. you have collateral managers, you have the banks, you have the insurance company, you have the assaying companies, the certification agents, you have investors that want to participate in it, and you have aggregators that are going to be aggregating the goods before it gets to the center. It's a big ecosystem. You have the issuing houses, you have the brokers that are going to be trading on it, and what SEC is doing is trying to pull together these various stakeholders so that instead of everybody working in silos, there's a common front and a common position to solving this diversification of our mono-income approach in income for the economy. And it's working out very well because there's been a lot of focus on that. And if you look at our economy, our economy is the biggest in Africa, and we have the charter that allows now that we can do inter-trade in Africa. Nigeria is standing in a space whereby we can actually harness and coordinate inter-trade in Africa, both in commodities and commerce in Nigeria. And this commodities ecosystem will give us a lot of space to be able to leverage on that and to play a leadership role in Africa to be able to do this. And this will add heavily into our own economy. Also, yesterday at one of the breakout sessions, it was mentioned also that, that if, for example, for Nigeria as a country, we are one of the few crude oil producing countries in the world, one of the few that does not have an energy exchange. And that's why we at the Lagos Committee of Futures Exchange, we have started making arrangements to make sure that we can have a local commodities exchange trading our crude locally. Now, one of the speakers yesterday at one of the breakout sessions mentioned the issue of hedging. Hedging is a situation whereby, for example, the crude oil price has gone down to $30. If there were hedging instruments in place, maybe a 2-year period, 1-year period, the fluctuations of the global oil markets would not really impact directly on our bottom line the way it's impacting on it now. Those issues were discussed under derivatives yesterday too. So it's a welcome development, and it's timely that we are going in this direction. And
all right,
capital formation globally, for most economies, the key thing about those markets that if the federal government must focus on the capital markets, and the commodities market supports the capital markets too. And if you have a heavy focus on the capital market, what you do is you'll be building up the middle class. And if you have a vibrant middle class, you have a very, very healthy economy. Without a vibrant middle class, you're not going to be able to have a healthy economy.
All right, Mr. Akeredolu-Ale.
And the capital market plays a very, very critical role.
Yes. All right, Mr. Akeredolu-Ale, just before I let you go, a quick one. Between the public-owned exchanges and private operators like yourself, what are the prospects for you to match the pace of growth in the stock and debt markets?
It was discussed yesterday too. There are cost trends in every aspect of it. If you look at the private sector part of it, you see private sector, the efficiency in the private sector. And if you look at the public sector too, you see capacity in the public sector. Let me give you a very good example for the public sector. For example, you want to have silos. You want to have warehouses nationally all over in all the geopolitical zones. If you're an exchange, you cannot, or the private sector cannot alone start deploying resources to build all those silos, all those warehouses all over. So at the end of the day, the public part of building of this ecosystem is as important as the private sector. The private sector will easily be able to mobilize cash towards this commodities exchange and fungibility and create instruments that are tradable. And the public sector will also be able to assist in some hard infrastructure that might require long-term funding that if the private sector participates in it alone might not be profitable. So both sides are good, and they're going to be complementary of each other for us to be able to build this ecosystem to the next, which is what is applicable globally in every other part of the world, that the commodities ecosystem is thriving effectively.
Okay, thank you very much, Mr. Akeredolu-Ale, for sharing your thoughts with us on this particular subject. Mr. Akeredolu-Ale is the CEO of the Lagos Commodities and Futures Exchange. And in spite of the negative effects of coronavirus across markets, the earnings season remains a trend to watch in the equity space, while some numbers come across as impressive, others are not. Biodun Kiribe of AfroInvest will dissect some of these earnings with my colleague, Temple Ashajum. Temple.
Yes, Chimezie, thanks a great deal for this time. So, Abiodun, let's look at the earnings season at this point in time. We've seen that compared to years ago, by now we would have seen a whole lot of these numbers coming in from listed companies, but we haven't seen that. It looks like the opposite is what we're seeing at this point. What do you make of that situation in the market?
Thank you, Tempo. I think I would say we've seen numbers from the companies that matter. That's on a lighter note. I mean, the likes of the big banking names have released their numbers. Yeah, we've seen numbers from MTN,
GT Bank,
Zenith Bank. So, and those really are the numbers that matter, and the numbers are quite impressive. They're not disappointing. So yeah, I think yeah, that's good. For the other names that are yet to release, maybe. I think, like you mentioned earlier, some of them are sending in notifications as to...
Especially the insurance firms now.
Yep, so that just tells you that possibly they still have some bookkeeping work to do internally, still going through audit process, talks with their auditors and all of that. So yeah, I think that's just what...
I think folks like Royal Exchange talked about their subsidiaries, which is a bit large. They have like 6 subsidiaries, and that is giving them a bit of a drag around the audit system. Information technology challenge in case of sovereign trust. But why do you think it's limited to the insurance space? I mean, right about now.
I wouldn't know why it is sort of skewed to the insurance space. It just seemed like... the sector is poised to sort of disobey regulations, in quotes, and I don't know how well. I know the NSC usually sanctions companies when they err, or I don't know. I think they do sanction those insurance companies also. Really, I really don't know why it is skewed to this.
Perhaps the recapitalization exercise is one of the drags that they're having as well.
But that has
some
been
investors
postponed.
Buying in, and
that has been postponed.
Yeah, but given the window dressing, the preparations towards the June 30 initial deadline,
I even think the June 30 deadline would still be postponed further because signals from the regulator really isn't so strong and compelling. I think a few of them are working on the background to sort of put their numbers in place, speak with intending or interested funding partners. Take, for instance, we saw Law Union being, acquired by I can't recall the name at the moment now. So yeah, we've seen 1 or 2 of those transactions taking place, or recapitalization exercise taking place. But like you said, bookkeeping work is still going on. Sort of need to clean up their homes or the house to welcome in their new suitor, But I don't think that majorly is the reason for the drag or the delay in reporting of their numbers on the NSC.
Quite a number really going on in that space. Some of them are also involved now in the primary market space. The rights issue or consolidated hallmark insurance is ongoing till I think April the 1st or thereabout. And then you have a Prestige Assurance. I think yesterday also announced a review of their offering to the shareholders. I think it's now 38 for 15 existing shares or thereabouts. How do you think that will pan out eventually?
Eventually, it is going to be just what it is. The insurance companies really need to sit back, look at the ratios, look at the numbers to exactly define how much they need in terms of recapitalization and what should be the source of that funding, in terms of the cost benefit of the source of funding, how much of pressure does it put on them. So they would want to look more first into equity funding, which is why you'll be seeing a lot of them doing the right issues. The ratios of the issues really, of the right issue really may just not be so much to worry about. It's just trying to work towards exactly what they need to fund with. So what they need to fund with determines the ratio of the issues and then possibly the funding capacity of the equity holders again. If that is fully utilized, then they possibly then need to look at alternative sources of funding, either through private equity, some sort of outside funding, maybe. Debt really shouldn't be in the window for most of them, even though we have low interest rate environment. But I don't think they should be looking at debt really. They should focus more on equity funding and maybe some sort of strategic private investor kind of funding also.
I think the issue of debt has even been addressed by the regulators, deterring them from going into that. But let's quickly look at some of the other earnings that we have on our radar. Adova PLC, which used to be Forte Oil PLC, it's now it's out on the system. Well, they did some 31% rise in turnover to 176 billion naira or thereabouts. I understand the PMS contributed whopping 70% to that number.
90%.
What was your impression when you saw that number? Do you think they can actually sustain the trajectory that they found themselves at right now, given what is going on in the downstream space at this point, as well as upstream that they're also engaging? So
this is probably the first consolidated audited numbers they'll be reporting since after the divestment, since after Uncle Femi Akeredolu-Ale divested. So this is just about the first numbers, and we could see the impact of that divestment playing out on the numbers. They reported about 2.67 billion gains from sales of subsidiaries, from the disposal of the subsidiaries. So the entire disposal itself is just about 12.97 billion thereabouts, reporting a gain of about 2.67 billion. I think that is significant. So that really boosted their performance, boosted their numbers for the year, and that's why you could see profitability jumping up by over 500%.
But no payments of dividends.
Yeah, they did. I think there's about 1-something billion that's been allotted for dividends, if on the back of the proceeds from the gains from the proceeds. That said, I think the key takeaway is that PMS sales fuel is critical, is supporting the business, accounts for probably about 90% of the numbers. Lubricant sales and grease sales accounts for roughly another 9%, while the LPG sales accounts for a very negligible 0.01%.
I understand they are now going to divest, intensify their investment in that space.
So the guys who bought the 74% stake during the divestment, Prudential, the name just went off my head right now. They have a project they just completed in the Niger Delta State, about 6,000 metric tons of LPG facility that they just completed. So that I think they're going to rely on the retail outlets of Adova to aggressively push the sales of LPG and even cylinder sales, which is what I think can support their business going forward. They really can't see these sort of repeated numbers from divestment supporting the numbers anymore. Also, for the 2019 number, we also noticed that there's a bit of subsidy recoveries, which also boosted PMS numbers. I think the federal government sort of settled there are these FX-related payments or discrepancies, payments based on discrepancies that were outstanding. It was sort of sorted out in 2019, and that's also supported the numbers for 2019. In the bigger picture of all that's happening in the oil and gas industry, both globally and locally, it's clear to see that it's sort of tough. It's going to be tough for the downstream sector, which is a very thin margin business, on average of about 8% margin, homogeneous product. And competition, it's also there also. So it's going to be tough to rely on that core business to drive growth going forward. So they need to sort of diversify heavily and aggressively into LPG, which
except
is
subsidy removal and all of this, the regulation happens. All of Let's finish up now with the banking space. On Monday, Zenith Bank specifically released its numbers. They had the AGM rather. I think they're done with the payment of the dividend. What do you make of this bank? Because it remains the dominant bank in the industry right now.
Zenith is. I don't want to sound biased. I like Zenith personally. So it's fundamentally it's a good stock. It prides with decent performance indicators, be it cost to sales. They may not have the best cost to sales. Cost to income ratio in the industry. GT Bank price as the best looking at that indicator. However, if you compare with things like profitability, they probably declare the same profitability numbers with the GTB, the same dividend numbers with the GTB. And then if you look at the yield from the Zenith Bank would most likely outsmart what you get from a GTB. So that's where you would want to think as a retail investor at the end of the day, where your focus is on what comes to your pocket at the end of the day, because you stake your funds, your funding in the business is because you're expecting some returns, which is either capital
right
or
about
dividend.
now, if you look into the market and see the way the numbers are crunching right over there, it is one of the main peaks in the market,
Exactly.
at about 13 to 14 naira.
naira
And for those
a
that
share.
actually picked the low valuation at 10 naira 92 kobo,
thereabout. So
you've got some celebrations right about now.
Yes.
Okay, so let's continue the celebration after this time. Well, thanks a great deal, Akeredolu
right.
research
Thank you.
analyst with Afrinvest. Over to you, Chimeze.
All right, after the break, we'll do an opening call to London as well as the trading day back here in Nigeria.